The current public portfolio sits at 75,740 year to date, up 38%. Today, I want to talk about IWM and why I think small cap may outperform large cap in 2024. If we look at the current environment of small caps, there's a couple things that they have going for them. First, a lot more small cap companies have floating rate debt versus large caps. So around 45% of small cap companies have a floating rate, whereas large cap is around 9%. When interest rates are being cut or projected to be cut and going lower, that actually helps any company that has a floating rate. They're a lot more sensitive to rate changes, and the Fed is expected to pivot sometime in 2024. And the rate going forward is supposed to continually go down until inflation is fully under control. Secondly, you have the PE ratio, or the valuation of small caps, versus something like the S&P 500 is much lower. And when the valuation has been this historically low, it's usually a good time to be buying into it as the valuation relative to larger cap companies catches up. This year in 2023, large caps has outperformed. If you look at the 5-year returns of IWM, which is the Russell 2000 versus something like the S&P 500, you almost have double the percentage. And I believe the gap will be closed. And that's the thesis of why I believe small caps may outperform in 2024.